Hi, everyone, and welcome to Finance Plug for You. In today's episode, I have the distinguished honor of bringing on board Solomon and Sami, who will be talking about money management and investment. So, we are going to have a presentation from Solomon, and then if there is any follow up questions, we will address it. So, without wasting much time, Solomon, can we dive right into the session?
Okay, thank you very much, Ernest. It's a great pleasure to be on your platform. We've seen the works you've been doing, championing this cause. I must say it's a very good thing you are doing, a very big thing you are doing, and we say God bless you so much. Once
Thank you.
again, my name is Solomon Ackom, as rightly mentioned. I'll be your financial advisor for today and beyond. Let's say I'm just a financial literacy advocate. I love the things of finance, money, how to manage finances. Budget and saving. So, conscientizing the youth on how to manage their finances. Today's session is going to be brief. We are just going to talk about how to manage your money and certain investment options that you should know.
Yeah.
I've come to liken the fact that you see, as humans, we yearn to acquire money, and we say money is good. I tell people that who doesn't love money? Money is good, but you see, there's not just about making the money. Yes, after acquiring the money, what next? What I tell people is that you can make the money, but the main course is how to sustain the money, how to manage the money. And that is what we are talking about, how to make good use of the money, how to let the money keep on working for you as time goes on. Because in this economy that we find ourselves, any incontingency can hit you up at any point in time. The question you should ask yourself is, when that crisis come or when that emergency come, how prepared are you to face that? And that is what we are here to talk about. All right. So the question is, what is money management? And I looked through Investopedia, saying that money management broadly refers to the process utilized to record and administer individuals, household, or organizations' finances. So, in simple terms, just say it is a judicious way of making the best out of your finances. As I spoke about earlier, that getting the money is just not enough, but how to manage it and make the best out of it is what matters. So, what is investment as well? Investment is really, really broad. And I tell people investment is simply putting your money to work and making it work for you, putting it in a venture and expecting returns. That is simple terms what investment is all about. The ability for you to look for a venture, put in your resources, your money, and let that resource or that money work for you in the expectance of what? Returns. So the end goal or the end result is that you are looking out for returns, and that is simply investment. Investment can be in diverse forms or diverse ways. Sometimes it's not only into financial assets. I tell people that even ideas, generating ideas is an investment, because in this world, everything is about risk. Wherever you find yourself is about risk. If you are driving a car today, I say there's risk in that. If you are sitting in your building today, there's even risk in you sitting in your building, because it can fall at any point in time. We are not praying that that should happen though. But investment is looking out for opportunity, putting your resources there and expecting returns. So Charles A. Jaffe said something, and I love this quote so much. It says that it is not your salary that makes you rich, it's your spending habits. And you see, Ernest, I've come to understand that. You see, he says that it is not just about your salary. If you receive a salary of, let's say, a $10,000, a 10,000 pounds, a 10,000 Ghana cedis, at the end of the month, it is not that which tells you that you are rich. No, but it is how you go about spending the money that tells that you are rich. And so I always use two people as an example. So I say we have, let's say, party A and then we have party B. So let's say party A at the end of the month takes home a salary of, let's say, £1,000. Party B at the end of the month also takes home a salary of, let's say, a £500. Obviously, I believe we are all going to say that party A is richer than party B because A is taking home £1,000. Yes, that is the notion. But Charles A. Jaffe is saying that no, A is not richer than B. At the end of the month, we are looking at both of them to see how much both of them have been able to put down. So if at the end of the month, party B, who takes home a salary of £500 is able to put down, let's say, even a £50, and party A, who takes home £1,000, is not able to put down anything with the excuse of he has a large family. I mean, his expenses are so large. I mean, he has about 5 children, and so he can't even have time to put down even a penny. We are saying that at the end of the month, B is richer than A because B has been able to put down something for tomorrow because B knows that there is always going to be a tomorrow. There are always going to be emergencies. And when those emergencies come, B will be ready to sort them out. And that is the power of savings. And that is why I love Charles A. Jaffe's quote. Now we are looking at 10 keys of effective management, money management. We are looking at certain keys that you should look at in managing your finances. And the first one is financial education. And so I tell people that financial education is very, very key. The next slide. Yes, financial education is very, very key. The previous one, please. Yes, financial education is very, very key. It does not matter the sector you find yourself in. And a lot of people give excuses that I am a plumber. And so things about money, I don't have to worry about. I am a carpenter. I'm a dietitian. Everything about money has to do with the bankers, the accountants. I came to tell us today that no, that notion should be erased, that anything concerning money should be your priority. We are saying that financial education should go through your mind, that you should know certain basic things about finance, like interest rate. So once you are able to spend money, today you are able to buy, we are saying that things about money should be your priority. So you should get to know certain basic things about finance, like the interest rate I'm talking about. You are going to do what we call treasury bill. And you are told that treasury bill 91 day is giving you around, let's say, 24.7%. We are saying that 24.7%, does that mean that at the end of the 91 day, which is the 3 months, you are going to get the whole 24.7? No. So certain basic things like the 24.7 is an annual rate. So if you get to do the 91 day, you are not getting the whole 24.7. You've just done 91 day out of 365 days. You've just done 1 quarter out of 4 quarters. And so at the end of it all, it will be divided by 4. So you don't get to get the whole 24.79. These are certain basic things that we have to get to understand. What is your risk appetite before you get to invest in a certain venture? Are you a person that should invest in? Are you a risk averse person that any investment that deals with your capital, or when you see your capital dwindling, it will be of much concern to you? These are certain basic things that we must get to know before we are able to manage our finances. Now let's look at the second one. The second one is setting personal financial goals. And I very much like this point because you cannot just start without having a plan, without having a goal. If you are able to manage your finances very well, it means that then you should have a goal. You should have a plan. A goal that says that in the next 5 years, probably you want to build yourself a house. In the next 5 years, you want to buy yourself a car. In the next 5 years, you want to do this. So we are saying that set yourself a personal financial goal and a plan. So the goal is saying that I want to or I want to build a mansion in the next 10 years. Then the plan is saying that, okay, let me put it down to paper. What ways, what means am I going to use in achieving that goal I have set for myself? Let's go to the next one and see. So we are saying that do not just set any goals. Your goals must be SMART. And I love the SMART acronym so much, saying that you must have an S in your goal. You must have an M, A, R, and a T in your goal. So your goal must be specific, taking the S. Specific, saying that ask yourself certain questions.
We're talking about money management and investment. So we are going to have a presentation from Solomon, and then if there is any follow-up questions, we will address it.
There's a feedback.
So without wasting much time, Solomon, can we dive right into the session?
Ernest. Okay. Thank you very much, Ernest. I mean, it's a great pleasure to be on
Can you
your
hear me?
platform. Yes, there's a feedback. I don't know if you can hear that. Championing this course.
Yeah, I don't know where it's coming
Very,
from.
very big thing you're doing. And we say, God bless you so much. Once again, my name is Solomon Ackom, as rightly mentioned. Are you? It's okay now. Yes. Okay. So you are saying that your goal must be smart. So the S is specific. Ask yourself certain questions. Why are you setting this goal? What is the reason for setting this goal? The goal should be very, very clear and concise. It should detail exactly what you want to accomplish. So, an example is, let's say, I want to save $5,000 for an emergency fund. That is specific. Now let's go to the M. The M is saying your goal must be measurable. So it means that it must be quantifiable. You must add figures to the goal. You need to be able to track the progress of your goal. You must be able to track the progress and also measure the outcome of your goal. So the first one being specific is saying that you want to save 5,000 for an emergency fund. That is specific. Now measurable is saying that then I will be saving $500 each month. That is measurable. So you might set aside, let's say, a savings account to be putting in that $500, and you are able to track. So in month one, I put down $500. In month two, I put down another 500. When you total the two, you are getting $1,000. So this helps you to be able to track them. Now let's go to the next one, which is achievable. You are saying that your goals should be realistic and attainable. Your goal, you must consider certain resources and then constraints. Look at your resources and your constraint before making sure that your goal is achievable. So example is simply, let's say, it must be based on your monthly income. So I always say that someone takes home a monthly income of, let's say, $1,000, and he says that at the end of the year, he wants to buy a Rolls Royce. At the end of the year, you would have reached a goal of $12,000. $12,000 will not buy you a Rolls Royce. In that regard, your goal is not achievable. In other ways, looking at your resources and your constraints, $1,000, you may not be able to even put down all the $1,000 because you have certain needs that you have to attend to. So maybe $500 may be enough for you, or a $200 may be enough for you, or a $300 may be enough for you. That is what we are talking about. The other one is relevant. You are saying that ensure the goal aligns with your broader objectives and it's meaningful. That's all. Make sure that the goal is meaningful. So why are you building an emergency fund? So I'm building an emergency fund, and it's important towards what? Your financial security. So you are building it because you know a time is coming that you will be in need of it. That is what we are talking about. It is relevant towards that goal. The last one is time bound. So set times to your goal. Give your goal a time frame, like a period of, let's say, 10 years. I want to build a mansion. In the next 5 years, I want to do this. In the next 2 years, I want to do this. That is the time bound aspect of the smart economy you are talking about. The next slide, Ernest. Okay, the third one is track and manage your expenses. And this is what we all term as budgeting. So in able to manage your finances or your money very well, budgeting is key. You are saying that you must have the ability to track, monitor, and manage your expenses. You are saying that every penny that comes into your hand is really, really, really necessary. Every money that comes into your hand is necessary. The same vein, every money that leaves your hand is also necessary. And people, I can attest to the fact that there are a lot of us here that we've wondered that at the point, hey, I received $1,000 at the end of the month, and then at the end of the month, you don't even know where the money passed. Before you realized you are left with nothing, you ask yourself, how did you go about spending that $1,000? That is a question you must ask yourself. And the next slide is telling us about how to be able to track the expenses. So this is an example of a budget. You are saying that you can have a sheet. We have other apps that gives you, expense tracker. You can go on, iOS and then Play Store and then download some of these apps, expense tracker. You are saying that have a specific place for income. So income is simply every money that comes into your hand. So if you have, let's say, any side gigs, if you have any businesses that you do, any windfall gains that you receive, you are saying that that portion is geared towards the income. So list them down. Then you also have a portion for expenses. So if you look at this example, these are the expenses the person is making. So let's say the person takes home a salary of 2,000 Ghana cedis with allowances of 6,000 Ghana cedis, so allowances of 2,000. Total income is 8,000. Then there's expenses. Let's go to the next slide, please. Totaling everything, previous one. Striking the difference, the total expenditure will be 235 Ghana cedis. The surplus is giving you 765. So at the end of the month, analyzing all this, then you realize that, oh, after calculating all these things, putting down your expenses and taking them out from your income, you are left with this amount. So that helps you to analyze them and then take certain expenses that may not be necessary. So someone has a subscription of, let's say, a Go TV, a DSTV, whatever. At the end of the month, you're asking yourself, you pay all these subscriptions and you don't even get to use all of them. Then you must begin to analyze them and take some of them out and reduce some of them. So that is what budgeting helps you to track your expenses. Let's go to the next one. So this is a simple budgeting rule. This is the 50-30-20 rule. So someone is asking me, so can you help me, guide me as to how to, manage my expenses? How do I divide them? What do I do? We are saying that the 50-30 rule is okay. You can fine-tune it depending on your resources. So someone will say the 50% goes into what we call the needs. So we have something we call essentials. Those are the needs. So these are expenses that no matter what, you must incur. The expenses that no matter what, you must, invest your money in that aspect. Those are what we call the needs. Then we have 30% going into your wants. So wants are expenses that really doesn't matter. If you don't take those expenses, it doesn't take anything off you. So you can allocate 30% into those wants. And then we have 20% towards savings. So this is the 50-30-20 budget rule. The fourth one is save before you invest. Save before you invest. And this is very, very, very critical. I love Warren Buffett so much. And Warren Buffett says something about saving before you invest. He says that do not save what is left after spending, but spend what is left after savings. He says, do not save what is left after spending, but spend what is left after saving. That is what Warren Buffett says. And that is the habit of savings. We are saying that you can have a piggy bank. The smaller amount you get, the coins, the notes, put them in the piggy banks. So I went to Newmont one time, and then one guy said that he has a piggy bank. And then what he does is that every 6 months, he breaks it, he opens them up, and whatever amount he gets, he uses that to sort out his children's educational needs, buying them books and other stuff. This is very, very brilliant. It helps you so that in that regard, when the emergency comes, when the time comes for you to use them, pressure wouldn't be on your income, on your monthly income. So having a piggy bank is a way of helping you to save, to be able to manage your finances. Let's go to the next one. And this is the greater picture of it. Emergency, emergency. We always hear of emergency, emergency. You ask yourself, so what is this emergency? I tell people that emergencies do not tell you when they are coming. Oh, before you get to realize you are hit up with that emergency, you are caught up with it. But the question should be, if today there's an emergency, how prepared are you to face that emergency? That should be the question. So to tell you that as humans as we are, we will always face emergencies. And then emergencies will not tell us when they are coming. There could be a job loss. Today you are in your office and you are enjoying job, and then there could be a government instruction, there could be any restriction on the job which will get you losing your job at any point in time. You're asking yourself, so should you lose your job today, are you prepared to be at home for how many years or for how many months before you get yourself another job? You are saying that your children could fall sick at any point in time. There could be hospital needs at any point in time. Set aside money towards emergencies so that when they come, you're able to sort them out. The next slide. Plan for retirement. So in managing your money, that you must be able to plan towards retirement. And we talk, come today, you are actively strong. A time is coming when you're working anytime. If this body is feeble at those times, how prepared will you be to face retirement? And people will say they'll rely on their social securities and all that. Yes, social security, they are And I will entreat anyone here that is not on a security platform to be able to see once the TN funds and even a backup towards retirement, because that is very key. Retirement is when you should even be traveling to the Bahamas, to the Santorinis, under your coconut tree, sipping the coconut, drink, having with your wife, with your spouse, whatever, able to enjoy your hard work and not the time of sorrow. Diversify your investment. And so we tell people that it is not good to put all your eggs in one basket. Diversification is very, very, very key to be able to manage your money very, very well. That don't put all those monies in one basket. Diversify. Have a varied form of investment structures that you put your money into, investment portfolios that you have, mutual funds that you can invest into, we have stocks that you can go into, we have commodities, we have bonds that you can buy, we have exchange traded funds, ETFs that you can also go into, we have your savings account, which is there. You can even put your monies in those aspects. So you realize that in this regards, you've spread your monies across these fields. So in time of any contingency, you know that you are not hit by the storm because your monies are spread across. If you take a look at what Ghana with the DDEP, with the bond incidents and all those things, you realize that if you had bought bonds, savings had gone into bonds, and currently, and we are all suffering, or people are suffering, and people are concerned about their money and all that. If you have spread your money in investment, you are saying the next one, before you do this investment, get to know your risk appetite. There are people who will say, people will just come and say, there's this investment venture. It is giving you higher returns. Let's go into it. I tell people that you need to be very, very cautious, because don't just run into certain investment without getting to know your risk appetite. Probably you are putting in £1,000, $1,000, 1,000 Ghana cedis into that investment. You are one of a kind that if you see that 1,000 Ghana cedis drop, you'll be very much concerned. It means that for such a person, you're a risk averse person, and you should know the kind of investment you go into. You don't go into high risk investment, which will temper with your principal or your capital. Are you a medium risk person? Are you one that you are neutral, that you are 50-50? Are you a high risk person that can venture into certain high risk investment? Know your risk appetite before putting your money into any form of investment. Let's go to the next one. So these are some low risk investment that we are talking about. We have certificate of deposit, fixed deposits that give you fixed interest rate over a period. We have treasury bills, we have government bonds. We also have mutual fund, which is a collective pool of investment. So all these are low risk investments. You are a risk averse person. They give you conservative returns. The returns may not be high because the lower the risk, the lower the returns, but the returns may be steady, conserving your principal for you. So if you are one of a kind, then it means that look at this aspect of investment. Your savings account is even there towards that regard. Let's go to the next one. If you're a medium risk person too, these are some of the investments you should look into. Balanced fund, that is balanced mutual funds that do a bit of bonds, which are low risk, and also do a bit of stocks. You also have corporate bonds. You also have real estate investment trust. You also have the ETFs as well. Then let's go to the next one. Then these are some high risk investments. So these are the high risk takers. If you're a high risk person, then you hear of the cryptocurrencies, you hear of the forex trading. You must be a high risk taker to go into such investment, because with such investment, your principal at any point can dwindle, your principal can fall, and stocks perform better in the long run. So if you want to buy shares, Don't just jump into buying of shares. Shares are good, but don't be expecting returns in the short term. So let's take, for example, the Meta stock. That's a Facebook stock. It started, the IPO was, in 2012, May 2012, with a price per share of $38. Yes, I remember, $38. But up to now, currently, the price per share is over $500. And in the same year, 2012, when it started with $38 per share, in May, September, the price even fell to $17. But currently, it is over $500 per share. So what I'm trying to say is that stocks perform better in the longer term. So over a decade, if you are studying the Meta stock or the Facebook stock, you realize that it has done over 800%. So that is the power of stocks. So if you want to buy shares of a company and become a part owner of that company, that is what it simply means. That you shouldn't be expecting returns in the short term. There are times it will go up, there are times it will come down, there are times it will even hit into negatives. So high risk takers at that point are not perturbed because they understand that over a longer period they are going to get higher returns, and that is how shares perform, or that's how shares work. Over a longer period, they give you higher returns. Let's go to the next slide. The next slide is discipline. Discipline. So with all that we have spoken about, if you are not disciplined, that is the caveat. If you are not disciplined, you can't work towards achieving all this. Being disciplined is staying the course. It may be difficult for you to put down $100, £100, 100 cedis every month. It may be difficult looking at your children's expenses and all that. But being disciplined, knowing that there is a tomorrow. Let me suffer today and gain tomorrow. Let me suffer today. That is the caveat we are talking about. Be disciplined in all regards. If you have to close your eyes to do that, close your eyes to do that. Gather them little by little. It may take time, but over a period, you realize that you'll be at a comfortable lead. The next slide. Patience. Patience. Patience is key. People come telling you that I'm giving you a $10,000. I'm giving you a 10,000 pounds. I'm giving you a 10,000 Ghana cedis. Take this money, invest it for me, and multiply it for me within the next 3 months. That is not magic. Investment is not magic. You are telling people that you must have the patience, you must have the heart to wait, because investment deals with time. Investment deals with time. So if you're an investor, whatever business you are putting your money into, whatever financial asset you are investing into, you are saying that have the heart to wait. Don't just jump into wanting returns. We all want returns. Who doesn't want returns? Who doesn't want the money to be doubled, tripled within a few time? But we are saying that you must be cautious in treading that path, because any investment giving you 100% return is good. But don't forget, if an investment gives you 100% return, it means that you are at 100% rate of losing your money. So have the heart to wait. Have the heart for patience. The next slide. And I leave us all with this quote: invest wisely. I tell people that in whatever you do, make sure you invest wisely. In whatever you do, you should be able to invest wisely. Don't jump into businesses that friends will just come and tell you that there's this business somewhere. If you put your money into it, it is very, very good. We are saying that make sure you ask certain questions. Make sure you're asking tough questions. If there's this financial company somewhere or financial service provider somewhere that is telling you to bring your money and let them invest for you, please do your due diligence. Make sure you're asking big questions like, how long has that company been in existence? What is their expertise? Are they regulated? In which sector are they regulated by? If there's an investment firm, which body is regulating them? Go to that body. If you come to Ghana, if it's a commercial bank or whatever, we are regulated by the Bank of Ghana. In whatever regime you find yourself, look for that regulator. Go into the website, get to know if that company that is saying bring your money is regulated. You can even call the regulator at any point in time to ask questions that this company, I want to invest in this company, I want to put my money into this business, I want to do this. I want to find out what is their standing, how strong are they, how long have they been in existence, are they filing, meeting their procedures, do they have any question mark? Ask all these questions before you commit your fund to any investment, before you commit your fund into any form of investment. The next slide. And so we are ending with this. Experience. I always tell people that experience is key. Whatever you do, whatever you find yourself, seek to gain experience. And Aldous Huxley said, experience is not what happens to a man. It is what a man does with what happens to him. That is why I love this platform of Ernest. He has hosted several shows on this platform. We are telling people that experience is not just what happens to a man, and I'll break it down. So I believe that we all know Michael Essien. I always tell people that Michael Essien is a footballer, yes, but you see, you cannot just stand up and say Michael Essien is an experienced player. No, you must see certain traits in Michael Essien before you can boldly hit your chest and say Michael Essien is an experienced player. Why am I saying this? I'm saying this because you see, the movement of Michael Essien from Liberty Professionals to Lyon to Chelsea to AC Milan to Real Madrid to Panathinaikos in Greece does not make Michael Essien an experienced player. But you see, what makes him an experienced player is when Michael Essien is on the field of play, and let's say he has about 5 opponents surrounding him. Michael Essien is able to make his move past these opponents. Michael Essien gives a pass, and that pass is effected into a goal. It is there that you can hit your chest and say, this guy is experienced. Why? Because he has been able to bring all the skills he has learned from these various teams onto the field of play, and that has resulted into the victory of the team. So in that regard, Michael Essien is experienced. So it is not just about the conferences you may have attended. It is not just about what I have said. It is not just about the platforms of the shows that NS has hosted on his platform, but it is the ability of you to be able to put all these things into practice. It is the ability of you to put all these money management tips into practice. And if you do this, you're on the verge of success. I end my sermon here tonight. Thank you very much, Ernest. I think we'll give room for questions if there are
Th-
any.
Thank you very much, Solomon. It was really, really insightful, and I've learned a lot from this that I'll be applying in my personal life as well. So we really, really appreciate it. Um, okay, I have one here, like a personal question here. The
Okay.
person said, if they want to, start an investment, what are some of the websites or what are some of the um, places they can go to gather information and then have make a well informed decision about investment?
Okay. Okay. So simply let's say if you want to do an investment, investment banks or investment firms are regulated. They have a regulatory body that oversees their activities. So you are looking
Yeah.
at, let's say in Ghana, you have the Securities and Exchange Commission. Wherever you find yourself, you have Securities and Exchange Commission overseeing the works of investment banks or investment firms. So you can visit the site at any point in time, visit them, and you will see all the investment banks that are regulated, all the investment banks that are licensed, all the investment banks that are in high standings. You see all of them there. Ones that have issues, you also see. You can see their contact details there. You can call any of these investment firms. Once you see them on the regulated site at any point in time, call any of them, visit their offices, visit the key that is visit their offices. Because now people are very, very cautious. People can call you over phone, bring your money, do this form of investment before you realize you are scammed. If you have to
Yeah.
visit their office and it's very near you, you can visit their office at any point in time, ask certain questions that you want to ask, get to know your risk appetite, and then go into that form of investment you are looking at. So visit their site, call them, visit their offices, and then ask the questions that you want to ask. I don't know if I've answered the question or if Samuel also has anything to add.
Okay, so the only thing I would like to add is that besides visiting their offices and also asking them questions, you should also have an idea of the kind of products you want. So in the same, normally when you go to the SEC website, they also have products over there. So they have mutual funds there. So you look at the type of mutual fund you need. If you're a low risk taker, then you are looking at the money market mutual funds. If you're a high risk taker, then you look at the ones with stocks or real estate or forex. Those ones can also help make a decision. Yeah, so that's what I would like to add.
Okay.
Okay.
Thank you.
Thank you very much, Sammy. I think the other ones are just, comment how people are enjoying the conversation and everything.
Okay.
Yeah. Let me see. And the other question would be, the person said, what kind of investment they can undertake that will protect them if the investment provider or any advisor goes out of business.
So I think someone will take this.
Okay, so with this ones, we'll be looking at the low risk investments. So if you do maybe the treasury bills, wherever you are, I mean, the state owned, we deem that to be low risk. We are not saying no risk. In Africa, we've experienced some risks when it comes to treasury, but normally they are the lowest forms of risk, where in extreme cases, that is when you lose. Most of the time, you are really protected. And also, when we look at regulated mutual funds, especially those which invest in also money market or low risk instruments, are also very safe. Mutual funds are like a companies which are they are like companies and they are managed by fund managers. So if their processes are right and their processes are secured, then in that case, even if the fund manager or the investment firm collapses, there is another fund manager who oversees the processes of the fund. So normally mutual funds, even though they are affiliated with a company, the company is only managing the funds. We have ways in which we safeguard investors from the abuse of some of these institutions. So in extreme cases where investment companies go down, sometimes their products are still there and they are only handed over to another financial management firm. So looking at treasuries, looking at mutual funds are also, but with mutual funds, they have risky ones. So normally the low risk ones, which have to do with fixed income instruments or money market instruments, that one, those ones you are assured that at least your principals are safe. Yes. I hope I've answered the question.
Oh, yeah, yeah, yeah. That's perfectly answered. Thank you very much, Sammy. Yes. So, I don't have any questions at the moment, but I think if people have questions, they can put in the comment section because this session will be available after the live. So, we don't want to take too much time. So I think we can bring this session to a close if you agree that yeah. So I really really appreciate honoring the invitation and coming on board. It's been very very insightful. I must say I have learned a lot. So we really really appreciate your time and everything you put in educating us in terms of money management and investment. So thank you very much, Solomon, and thank you very much, Samuel.
Mm,
So, guys, if
thank
you have
you.
any questions or anything, you can put in the comment section, and then we'll make sure we get back to you. So, thank you very much.
Thank you to Ernest for this opportunity. I mean, once again, I'm honored to be on this platform. It's a great platform and it's a privilege. So thank you for
Thank
the
you.
wonderful work you are doing. Keep it up. Keep it up.
Thank you. Thank
And I
you.
will entreat everyone, I mean, who has not subscribed to this platform to tell our friends, tell your friends, share this message out there for them to come on board, subscribe, and then be enjoying wonderful messages from Ernest. Thank you, Ernest.
Thank you very much. Thank you, Solomon. And thank you, Sammy. So, guys, have a lovely evening, and
All
then
right, you too.
we'll definitely catch up. Yeah.
Thank you.
All right. Bye.
Bye.